Between February and May 2026, cross-chain bridge attacks drained $329 million from the crypto market, according to a report from blockchain security firm PeckShield. The report highlights a persistent vulnerability in the infrastructure that connects different blockchain networks. These attacks are not isolated events, but part of a growing pattern that has seen multiple bridges exploited within a short timeframe. PeckShield's findings indicate that cross-chain bridges remain a prime target for hackers due to the high liquidity they hold and the complexity of their architecture. The report specifically references incidents involving IoTex's IoTube bridge and a separate exploit at Opulous, both of which occurred during the same period. IoTeX released a recovery roadmap after the exploit, while Opulous published detailed hack report. The losses attributed to these attacks are concentrated within a 4-month window, suggesting a surge in bridge-related exploits during this time. Earlier, in February 2026, crypto hack losses were at their lowest since March 2025, but the data shows a sharp increase in the following months. Cross-chain bridges are designed to allow users to move tokens between separate blockchain networks. They typically work by locking assets on one chain and issuing equivalent tokens on another, which means bridges often hold large pools of concentrated liquidity in their smart contracts. This liquidity makes bridges a high-value target for attackers. A single successful exploit can drain assets worth tens or hundreds of millions of dollars in a single transaction. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. That's far more than what an attacker could extract from a typical DeFi lending protocol or decentralized exchange. The structure of cross-chain bridges introduces multiple potential attack surfaces. These include vulnerabilities in the smart contracts that manage asset transfers, governance mechanisms that control bridge operations, and the systems that verify the legitimacy of transactions between chains. The more complex the bridge, the more opportunities attackers have to find and exploit weaknesses. PeckShield's report underscores that bridge attacks are not just about technical flaws, but also about the broader risks in crypto infrastructure. The report does not claim to have identified all exploits, but the $329 million figure represents a significant portion of the losses during that period. The report also notes that February 2026 saw relatively low losses, suggesting that the majority of the damage occurred in March and April. This pattern could indicate a shift in attack strategies or an increase in the number of bridges being targeted. The IoTeX exploit involved its IoTube bridge, which is designed to move assets between different blockchains. The company released a recovery roadmap outlining the steps it would take to address the security incident and prevent future breaches. Opulous, a music NFT platform, also experienced a hack during the same period, though the details of the exploit differ from those of IoTeX. Both incidents are part of a broader trend that PeckShield has been tracking. The firm has been monitoring crypto security incidents and on-chain exploit data for months, and its findings suggest that bridge attacks are becoming more frequent and sophisticated. The report does not speculate on the identity of the attackers or the specific methods used, but it does emphasize the need for stronger security measures in bridge infrastructure. The report also highlights the importance of transparency in reporting exploits. IoTeX and Opulous both provided detailed reports on their incidents, which is a positive step toward improving security practices in the industry. However, PeckShield notes that many other bridge exploits may go unreported or underreported, which could mean the $329 million figure is only a portion of the total losses. The next signal to watch is whether other major bridges. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. We'll release similar reports, or if new vulnerabilities will emerge in the coming months. If more bridges are exploited, it could signal a broader systemic issue in cross-chain infrastructure. Investors and developers should monitor updates from PeckShield and other security firms to assess the evolving risk landscape. The report also raises questions about the long-term viability of cross-chain bridges as a key component of the DeFi ecosystem. If these attacks continue to occur at a high frequency, it could lead to increased scrutiny from regulators and a shift in user behavior toward more secure alternatives. The next signal to watch is whether there will be a coordinated industry response to address bridge vulnerabilities, or if the current trend will persist.